Hey, Brent Richardson here. Welcome to the Rich Report. Big week this week, lots to talk about. We had the Central Bank of Canada come out. They cut rates by 0.25%, as was widely expected, but also mentioned that they were likely done cutting for now, that they're going to pause. Talk about that. There's also a press release right after this central bank decision where Tiff Macklem addressed a lot of questions about what's happening with the economy and specifically economic growth. So we had a pretty glum outlook for growth, where there's specifically weaker structural growth that we're seeing, and that this is likely to affect the standard of living, generally speaking, in Canada. So that he's not too positive on right now. We'll talk about that. And finally, a little bit of a precursor to the budget that's being tabled over the coming week on November 4th. So let's jump into it, starting with the Bank of Canada rate cut that came out. So the Bank of Canada overnight rate was cut for a second time in a row. And this cut brought the overnight rate down to 2.25%, from 2.5%. And it was a pretty unprecedented cut because as these two most recent cuts were happening, the inflation, the core inflation, which is the preferred measure of inflation to look at, this inflation was increasing. So the Bank of Canada, the range they're trying to keep inflation is between 1% and 3% at the highest. All right, so 2%, 1%, those are some good inflation. That's a better inflation range. Anything over 3% is considered high. It's too high. So inflation last month was 3.05%, and they cut. This month it was 3.15%, and they cut. So as inflation is increasing, they're cutting, and this is really the opposite of what you'd think they'd be doing, because higher rates tends to pull down inflation. And what this shows us, that the policy that they're modeling after at the Bank of Canada is really counting on inflation to either stay the same or come down. And a lot of economists, at the big banks and at other major firms, they tend to agree with the central bank that inflation should be coming down, that the economy is not strong, it's softening, and that that inflation should come down. But the Bank of Canada doesn't have a great track record at calling transitory inflation, and in a big way, really. And so inflation should drop, but we'll see what happens over the coming months. We'll see if that's true. So Tiff Macklem went on in this presser to discuss some more specific questions about growth. It's one thing to say, okay, growth is softening. I think most Canadians get that, but it's how it's softening that's really kind of spooky. It's Halloween, I get to use that word, and it's a structural change that we're seeing. So structural change in the economy means that investment is leaving Canada. Capital is leaving Canada, which means companies are leaving Canada, jobs are leaving Canada. And once these things leave, that's considered to be a permanent reduction in GDP growth, in productivity potential. All right, when a factory leaves, you can't just rehire those workers, it's gone. And so, but this is known as a structural adjustment in GDP, and it totally lowers the growth trajectory that we're on and the growth potential available in Canada. Even if things get better, the potential is being reduced. And so these changes are called structural changes, and Governor Tiff Macklem, the central bank, discussed how these structural changes are affecting Canadians, and really what it comes down to is generally speaking across the entire economy. Tiff Macklem noted that the standard of living for Canadians is likely to fall. All right, so expect less and less potential, less jobs. Pretty glum stuff. Unfortunately. So reducing the Central Bank of Canada rate, their overnight policy rate, can help ease the pain. And that's what they've been doing, is easing the pain with lower rates. That'll certainly help, but it's not going to bring back these jobs. It's not going to bring, you know, back factories into Canada, and it's not going to help companies look at Canada and say, hey, you guys reduced your rate by 0.25%, time to invest in Canada. Unfortunately, it just doesn't work like that. And so what needs to happen is the federal government, they're in charge of fiscal policy. So that's their budget. That's how the federal government invests money into the country, how they spend, whereas the central bank, they're in charge of monetary policy, which is basically cutting or increasing the overnight rate. So all the attention turns to the federal government now. You know, can they fix this? What's the answer to this? The Central Bank of Canada has passed the baton on. They said, we've done all we can do. It's your turn to take the baton and run with it. And so we're going to see the first major update on this in this week's federal budget. All right. And so, I mean, Mark Carney was the previous Central Bank of Canada governor, so he knows what's going on. I can only imagine that he's chatting with Tiff Macklem and they're working together. Again, a positive sign. I'm cautiously optimistic about. And Tiff Macklem was even a deputy under Mark Carney, so I think they know each other pretty well. Hopefully, they're coordinating as they pass this baton. So the budget's coming out, and there's a few things that are highlighted that I'm cautiously optimistic about. Again, the government doesn't have a great track record. Lately, they've, I think, got us into this mess, but you know, I choose to be optimistic, but with some major caveats that I'll address here. So the budget is really looking overall to diversify Canada's economy away from dependence on only US trade, really, diversify to Asia and other areas, into Europe, and to also retrain workers that are most likely being affected or that are being affected by trade right now. What are some of the areas that they can be retrained in, and that, you know, there are jobs available, such as the trades, and you know, pretty good jobs too. A lot of the trades pay very well. So this is the major focus of the budget. And, you know, it all sounds very good, but there are some criticisms around the budget. First of all, it's probably going to be huge. 70 billion to 100 billion is being discussed. That would be, you know, approximately 3% of GDP, which is a huge budget. This kind of makes sense in that, you know, it's a transitional budget. But there's also the fact that, I mean, they can spend $100 billion, but if it's not spent well, if it's not executed on or implemented well, these programs, these nice ideas, you could have a real problem if the municipalities aren't if they don't lift the red tape, if they don't make it possible for these budget ideas to be implemented, if provincial guidelines and provincial policy don't align with the federal policy. Again, hard to implement a federal budget. Everything needs to be in line from the federal government to the municipality, and there needs to be less restriction, proper restriction that does its job, but not over restriction that prevents investment. And there can't be this red tape. There can't be high taxes that you know, are archaic in nature, that, you know, were implemented when Canada's economy was strong, when the housing market was going ballistic, when rates were at 1 to 2%. Everything that was implemented in that time frame, going back, you know, 6, 7, 8, 9, 10 years, doesn't work right now. So that needs to change. Otherwise, this budget, these ideas, they're just going to hit a wall. And so more, I think, work is needed there with the provinces and the municipalities if this has any chance of really doing well. Overall, this does have the potential to build confidence that Canada is on the right track. I think we need more fundamental changes, along with a good budget reorganization of capital, but that, building a mine here, supporting a mine there, supporting, one port here or one thing there, that's not going to do it. There needs to be fundamental shifts. So hopefully we see that. The budget does have the right kind of perspective in mind, that they are shifting the budget to focus on two areas. One, which is operating spending, such as government spending, supporting programs, supporting running the government, and the other category is capital spending, supporting investment. So again, all these ideas are good. It's just a matter if the alignments there with the municipalities and the provinces to see if this can actually be implemented properly. So if it can, we might see that our growth trajectory returns, that we can undo some of this structural decline that permanently affects Canada. It is possible, but it's tough. It's an uphill battle. So I remain cautiously optimistic. I think it's important we have transparency, what's working, what's not working. We need to see results as they're happening. Only this can really keep the government accountable. It can't be in a black box. So I'll be monitoring this as one of the themes on this channel. Click like and subscribe to see how this budget plays out, to see how it plays out over the coming week and months and even years ahead. Thanks so much for watching. I wish you a good day.